currencies around the world are all fixed, and they're all fiat, obviously.
Well, they're not fixed, but they are fiat. They all float.
Well, they're fixed to each other.
They're not fixed. We don't have fixed exchange rates anymore.
I'm sorry, they're floating with each other. You know, if you look around the world, we're printing money, but also the UK is printing money, and Japan, they're trying to destroy the yen, and they haven't been able to with all the money they're printing. How is that going to work out? I mean, are we going to drag other countries down with us?
Well, yeah, every country is printing money because, see, the dollar is the reserve currency. And as we debase our money and export all these dollars, foreign central banks keep printing their own currency to buy up the dollars to prevent their currencies from rising against the reserve currency. That's why all these foreign countries have these huge foreign exchange reserves, because they had to buy up all these dollars to keep their own currency from rising. That's how come you have all these sovereign wealth funds. This is all the end result of our profligate, irresponsible monetary policy, where we export inflation all around the world. That's our biggest export, is inflation. But at some point, the rest of the world is going to say, we can't do this anymore. They're going to figure out that we've conned them. And they're not going to do it. And I think we're very close to that day of reckoning happening where the world won't do that anymore. But yes, I mean, all currencies are inflating. That's why if you look at, prices, the gold price is going up in terms of every currency. The price of oil is going up in terms of every currency. They're all creating inflation. But the thing is, the rest of the world can stop. They don't have to keep creating inflation because they're only doing it to buy up the dollar. The minute they stop doing it, the minute they stop printing their own money, because they don't have to buy our dollar, then their inflation can stop. But that's when our inflation kicks into high gear. Because then all of a sudden, all the money that we're printing, it's not going into the vaults in Saudi Arabia or China. All that money is circulating right in this country. And it's not going to help us. It's just going to send prices through the roof. Because it's just paper. There's no real wealth associated with it.
All right, 24.
Before I ask my question, I just want to tell you I'm retired from the military, but you got my vote.
Thank you.
I'm hoping for president. My question is, if I elect to put money into that thing you're talking about in Australia or Switzerland, what are the IRS ramifications? Do I have to keep track of that? Is there?
Well, yeah. What we do, I mean, there's all kinds of requirements that I have, and so what happens is, I have to take down all sorts of information from you because of the Patriot Act. If you want to buy gold from me, I have to do all kinds of things to make sure that you're not a terrorist, and if anything looks suspicious, of course, I will rat you out to the IRS, because I have to. But basically what happens is, let's say you buy $10,000 worth of gold, you fill out the account forms, we take all the information about you, get your photo ID, get all this stuff, long paperwork information. We approve you, we open up your new account, you're not a terrorist, we take your $10,000, buy some gold. So far there's no IRS reporting, but if you sell some of your gold or you liquidate it and you take it, you say, let me have $5,000 back, then what we do is we prepare a Form 1099 and we send it to the IRS with your Social Security number on it, and we say that so-and-so cashed out their gold, and this is how much they got. So then, because it's up to you to then report to the IRS whether or not you had a gain on that transaction, whether the gold went up or down during the time that you held it, and if it was a gain, you're supposed to report it as ordinary income. Even if you hold it for 2 or 3 years, there is no capital gains treatment on precious metals. It is ordinary income, which of course is one of the problems, because let's assume the federal government creates massive inflation, and you convert your $10,000 into gold, and because there's a lot of inflation, let's say you have 1,000 ounces of gold that you bought, or 100 ounces of gold that you bought for $10,000. Let's say a few years later, that 100 ounces of gold is now worth $100,000. The government says that you have all this income, but you really haven't earned anything. You still have the same 100 ounces of gold that you started with. What happened is that their money lost value. And when they tax you on that, you actually end up losing your principal, because now, let's say they raise the income tax to 50% and you sell it, they're going to want half your money in taxes, even though it's not really a gain. You're actually going to have to give the government 50 ounces of gold. You no longer have 100 because the government took half and they called it an income tax. That is why one of the things that Ron Paul wanted to do, which I would love to do, is exempting gold from any capital gains tax, because it's actually money. And if gold goes up, you're not getting richer, you're just not getting poorer. And the government shouldn't be able to tax you because you avoided a loss and call it an income tax. There are ETFs in other countries. You can buy gold ETFs traded on the Australian Stock Exchange. So you can buy ETFs outside the United States if you want to guard against that. Although my gut is, though, if you own them in the U.S., they might find a way of confiscating your U.S. brokerage account. Although technically, you might say, well, this isn't gold, this is security, just because the security consists of gold. I mean, there are also closed-end funds, like Central Fund in Canada that owns gold and silver, and it's a closed-end fund. So that actually, sometimes you can actually buy the shares for a discount to the value of the gold and silver. Most of the time, it's trading at a premium to the value of the gold and silver. The good thing about the ETFs is that they never trade at a discount or a premium. The price is always exactly reflects the price of gold or the price of silver.